Hey guys, JR with Secure Metals Exchange with another technical analysis here for today, Thursday, February 14, 2013. Happy Valentine's to all. And I'd like to get right to the technicals here. We got a lot of lines here. So let's delete all of these lines here so we can get a better picture. So currently looking at the daily chart here. As we can see here, we are in a little bit of a downdraft here, okay? We got a high, another high, and another high. And we have a low, another low, and another low here. So this is the question. Are we going to create another low? Are we going to fall below 1625? So the case could be made that we have a little bit of a bullish divergence here. This line goes down and this line goes up. So it could be that we're not going to create that new level, that new low. But if we do, then again, the next level would be roughly around 1600. Now we have a little bit of a confluence here with some of the indicators. Basically, as we can see here, the 60%, 61% Fibonacci retracement extending from the May low all the way up to the October high of last year. And you have 61% Fibonacci retracement held back in December, held back in January. We're hoping that it's going to hold back here again. And again, when you have a mix of indicators, that's a good sign that it might hold. But again, we need to just sit and wait and see if these levels are going to hold. So again, a little bit of a bullish divergence. This is going up, this is going down. The 20-day moving average going sideways. So I personally suspect that we're going to see some sideways trading, because as we can see from here, really what we've been doing is just really trading sideways here since the end of December. So we've just been floating around here in this range. So we're hoping that we're going to find some support here, come back up here to 1694 and possibly go even higher. As of right now, if this bullish divergence plays out, then we should at least see a 1650 rise from 1634 where we are now, possibly all the way up to 1661, and come back and test this 50% Fibonacci retracement. All right. What we don't necessarily want to see is we don't necessarily want to see a fall below 1590. I don't really care to see these types of levels. But if we do some longer term analysis, these look to be main levels of support as of right now. So you have this level was support turn resistance, supported here, and now it's been holding us down. It's now resistance, and of course we have this level here, which to me looks like a great level of support right here. So if it does turn out that 1630 does not hold, then the next level to look to is 1600. Even psychologically, that's a good level also for support. So we do expect to see a little bit of a move to the upside. So if this is the case where the trend line is going to continue, again, you have some sideways consolidation here, some sideways consolidation here. Remember, the longer we trade sideways, the bigger the breakout to either direction. So if this does not hold, then we can possibly look to find support roughly here at around the $1,600 level. Again, held back here. You had a false breakout. Anytime you have a false breakout, the breakout to the opposite direction is usually much bigger. And of course, over here, it wasn't necessarily a false breakout, but we did see that we were able to come out of it unscathed here, right? So we were able to come out of this trend here, and it just exploded to the upside. Now it looks like we're doing a little bit of consolidation. It's, again, a little bit of consolidation through time. Volume right now, medium volume. And of course, 20-day moving average, 50-day moving average, 100-day moving average, all above us, not necessarily positive for us. But again, nothing really here suggesting that we're going to see a big move to the downside. We are printing $85 billion. So we, again, as a matter of fact, I made a prediction on my last video, or actually about 2 videos ago, where I said I personally feel that this is the low for the year. So if my prediction is right, I predict that 1625 is going to hold, and we are from here going to see higher prices. But let's see how this momentum, there is a little bit of momentum here, but we do see our stochastic starting to switch here. We're starting to see a curve. So let's see if this curve holds. If it doesn't, then again, like I said, 1602 is the next level to look out for. My prices here to buy, I really like this level here to find some buying opportunities. Anywhere in this giant box here that I've drawn, that's a great level for me to get in. I really like these levels long term, and obviously we're looking to see higher higher prices now. Also, I think I've done this before, where you actually look at the time frame. So let's say here between August all the way up to March, we see a low and then we see a high. So historically speaking, we're really in a good time to see the metals rise. Historically speaking, usually around this time frame, all the way up until May, up until March, up until June, you usually find a high. So again, this was back in 2008. We can also make the same case back here in 2005, where we saw in October, November, we saw a little bit of a low. By June or May, we saw a high. Same case back here again in 2006, where in October we saw a low. Again, by the time you saw March, you saw another rise. Back in 2008, we just saw that. In 2009, you saw a low back in December, back in August and November and December. And again, by February, March, you saw another high. And again, 2010, back in October, you saw a little bit of a low here. By March, actually, you saw this by the end of November. You saw a high, a little bit of a dip by February, and again by May, April, we saw the high again. So I think you see what I'm saying. There's really a pattern, and usually between the October, November period, we usually see a high. Here you go in August, we saw a high in October. Now again, we're seeing a little bit of a low, but usually between here and March, April, May, we should see, technically, we should see another high, and that's why I really like these prices. So again, we're not necessarily seeing a big move to the downside. We're seeing some sideways consolidation here. We're seeing another one here, and again, I really like these levels here to buy long term. I'd like to take this thing back up to at least a 1731. And also 1800 before we begin to start taking some profits. Okay, so that's the gold chart here. Let's look at the silver chart. On the silver chart, basically the same thing. We're seeing a little bit of a bullish divergence back here. We have these. Let's make this chart a little bit bigger. So we have this little bit of a bullish divergence over here, but not necessarily a big one again. So we could come back down here to 29.51. Like I said before, I basically predicted that 29 was going to be the low of the year. Again, nothing really signaling that we're going to see a big move to the downside, printing $85 billion. Again, if we look at the weekly chart here on silver, stochastics are trying to make up their mind, seeing if they're going to go up or down. And, of course, the 20-day moving average right now moving sideways here, okay? So not too much to report, guys. But, again, I am looking for higher prices, and I am looking to break this cycle here, lower highs and lower lows. If we fall below 29.16, 29.20, then it could be the case where we'll see 28, low 28s, possibly even $26. But I don't really believe that we're going to see those levels. I personally feel that worst case scenario, we'll see the high 20s, 29s, I mean, before we come back higher and begin to test these $32 levels again, okay? All right, guys, stay tuned for tonight or first thing in the morning. I will be doing another video. This video is going to talk a little bit about government spending. It's going to talk a little bit about bailouts. I'm going to go over every bailout since 2008. And, of course, I'm also going to give you my 2 cents on the State of the Union address. Guys, enjoy the rest of your day. Bye-bye.